go through my pre-trade check routine, right? Pre-trade checklist. Pre-trade checklist. On the list, I usually look at cash, right? Do I have cash? At least 30% of portfolio cash. If I do, then I can, put on position. If I don't, then maybe consider either closing another position or, not to put on position. And the most important is the drawdown, right? The position size and the number of positions. So I propose, especially if you're new to trading, or you have, on average $10,000 account, maybe a little bit more, maybe a little bit less, but on average have four positions at a time, with maximum exposure of 2.5% of account value per position. So we'll take a look shortly to look at how do you determine position size. But these are some of the other routines, right? Wait 2 to 3 days to confirm the trend change, right? Market did pull back 5%. We had a strong rally. We are retesting basically all-time highs, whether it's a small cap stocks that are retesting multi-year high, not all-time highs, but multi-year high. S&P's retesting all-time high, QQQ. So I would wait 2 to 3 days to confirm, let people digest the retail data. It did come in slightly less than expected, right? And CPI data came in slightly less than expected. So wait 2 to 3 days to kind of determine whether the trend has changed or not. Allow more time, allow more space in terms of if you're trading options, right? We have May expiration, so you definitely, the goal today is to close all your May positions as we approach in Friday expiration, especially if you have in the money options or near the money options. And allow more space, right? Allow more space looking at the stop level, right? We were looking at 50-day moving average as your key support level, or at the recent lows, but those are the key support levels that you wanted to consider, right? So that's pre-market routine. Let's look at the market. Last time I checked, so yield considerably lower, right? Let's look, and it did break through this downtrend, the uptrend, sorry. Moving average below 200 moving average for 30, right? That's kind of been this long-term overhead resistance for 30 before it broke out. It also spans multiple years, 4.3. So I think that's 4.3 is an important level that I would look at. But obviously, this is very bullish for the market, right? Because this uptrend channel has been broken. Not sure, we don't have any major macroeconomic data that might shift the view of the inflation. So I would watch the 4.3 level and see if market can break down. But meanwhile, yield, it's pulling, it's testing 200-day moving average. Short term is oversold, right? The yield is oversold and dollar is oversold. So it could bounce back, but I think these bounces will be probably short-lived, and trend will be lower highs and lower lows on yield and dollar. QQQ is up, retesting basically all-time high. Spiders is up, retesting all-time high, 525. So I would watch these levels, and then the small caps are, so it is retesting basically, I think, 2-year highs. 2-year highs, definitely this year high and last year high. I would watch the 210 level and see if small caps are able to break out above that level. So I think, most people are bullish right now. Let's look at stock forecast toolbox in terms of predictions. Model C is a strong uptrend going into the CPI data. Obviously, CPI data did not disappoint, so it came largely in line with expectation, and month over month ticked a little bit lower. And overhead model C's 525.79 is overhead resistance, and for the next 10 days, if we do break through 525, probably 530 or as high as 535 is the next level. Those are the probably next level In S&P, as we approach in the next week, the major event next week would be NVIDIA earnings, right? NVIDIA earnings kind of was the catalyst last year for the rally into the July, June, July. So NVIDIA, I think, could be the next catalyst to push market either higher, right? In June and July, continue the strong momentum on the inflation data, or or it could disappoint. But that's not till next week, right? NVIDIA earnings is NVIDIA earnings is in 7 days. In 7 days, so next Wednesday. So NVIDIA earnings will be next Wednesday. So in terms of deciding 2.5% on spiders, I mean, if you're doing day trading, I would use 520, but let's see if it loads. Retail CPI data less than expected. Well, Raymond, it means that, well, retail less than expected, that could be, a sign that economy is cooling, which is, at least as of right now, interpreted as a positive, right? More reasons for Fed to cut interest rates. Because right now, people are not concerned whether we are in a recession or not, right? The consensus is that we have soft landing, and data is, people are still have jobs, and people are still traveling. So it's positive for the market. Model has been very bullish. Got lucky with inflation. Oh, yeah, model doesn't know about CPI data. It basically showed that going into CPI print, people were bullish and the market was bullish, right? We had a 5% to the downside in the past couple of months, 5% to the upside. So model showing basically what the technical trend is going into the CPI data. Good morning, Kirill. Welcome back. XOP possible reversal. So let's review that. All right. So spiders. If you're day trading, I would put 520. Right, 1% stop loss. In terms of position size. Right. If it drops below 520, maybe people are getting more concerned about inflationary data. That the economy is slowing down too much, right, based on the retail. But for now, I think it's all about perception of interest rates. I think now futures data basically indicates 2 rate cuts, maybe not in July, but potentially first one in September and maybe a second one in December. One before the elections, one is after the elections. So 520 is your support. After that, I would say 516. Right, and then the major one is the 50-day moving average, 512, which we talked about for quite some time, right? So if you're doing day trading, I would use support. 520 is your support number one. If you're doing longer term trading, I would be conservative, and use 512, right? So 5 points to the downside, or maybe 15 points to the downside. So if you're using 5 points as a stop loss for day trading, then on a $10,000 account, you don't want to risk more than $250. Or actually, on day trading, you need $25,000. You don't want to risk more than 1%. So less than 1%, that would be on $25,000, 1%, $250. If you don't do day trading, I would use support number 2. So number one for not, if you're not day trading, kind of 10 points to the downside. Right? Maybe you're thinking about a couple of days, maybe a week. And this would be probably medium-term support, 15 points. So it just shows you that the further you wait, the longer you wait, the position size decreases. This is you buying 25 shares. This is so you're buying 50 shares. This is you buying 25 shares. And if you're doing 15, you're buying 15 shares. So you can see the longer you wait, right, depending on what style of trading you have. Do you wait, do you wait a couple days? Do you wait a couple weeks? Do you wait a couple months, right? Based on that, your position size decreases, and that's how it should be. And the idea is not to risk more than 2.5%. So in terms of, so the question was on energy. Well, before we jump into the energy, let's look at some of the in the list in aggressive power trader. So you have DBX, you have LM materials to the list. Usually I would wait 15 minutes to kind of make sure that the stocks are stabilizing. But Microsoft looks like a good candidate. MLM doesn't have a lot. Again, we were talking about this before in terms of volume, right? MLM volume materials are in strong uptrend, but they don't have a lot of volume, so that's the problem. But you can always find an equivalent, maybe ETF that has more shares, right? Higher in shares. So maybe material, and you can see materials are breaking out on the interest rates. So you have materials leading the market, you have home builders, strong rebound to home builders, everything that's interest rate sensitive. Metals and miners are higher, dollar is lower. The retail sector is down on weaker than expected retail numbers. QQQ is up 0.5%, semiconductors is up close to 1%, Dow Jones is up 0.5%, Spiders is up 0.5%. And Spiders are basically new record high, right? A little bit higher, trying to break out. Right. So those are the candidates. The model does CMLM, so materials, XLB, and Microsoft as two candidates. Let's see. So let's review the positions. Let's see if I made any changes. I did close Schwab yesterday. Took a small profit. Again, CPI could have been worse than expected. Right, I was slightly bearish. So I did close Schwab position. Alibaba. So the trade on Alibaba, I do have a pullback, right? We had a after the earnings, pretty sharp pullback in Alibaba, but today it's rebounding on CPI data. So let's look at what it's worth. Last time I checked, it was 10 cents. So let's see. So right now it's actually trading at only 2 cents. So for now, the put spread is only worth maybe 2 cents. So we have to wait, right? I mean, we do have till Friday. CPI data is better than expected. So, and we have JD announcing earnings too. So for now, it did move one standard deviation, right? It was down 5%, 7%, but it didn't move 10%. So that's Alibaba. Question on oil. We do have XLE position. Let's see how's energy doing, right? On possible reversal. Let's look at that question. I mean, energy did pull back. It's testing 50-day moving average. It is above this October breakout, but for now, it's still negative, right? XLE and both XLP. Right, so looks pretty weak. Lower patterns of lower highs and lower lows. I do think that crude oil, right? We do see that the crude oil reaching the support level. I think it's extremely oversold, right? And should bounce back, but for now, crude oil is weak. It's below 50-day moving average, it's below 200-day moving average. So XOP, XLE, I would probably wait before. I mean, it's oversold. I probably wouldn't get out of the trade for now, but I still think for now, doesn't look like it. It's just going through consolidation process and bottoming process. All right, any questions on swap trade? So JD, I did iron counter. I sold call spread. Earnings are tomorrow morning. So I did sell 25.5 and 28.5 put spread, 43 put spread. Again, very large positioning, right? If you look at JD, you do have, similar to Alibaba, very large positioning and bullish bias, right? Where most people are buying calls. Alibaba, disappointed earnings. I mean, they have been struggling for the past few quarters. So Alibaba did disappoint, but FXI in general has been in a very strong uptrend, right? It has been a very strong uptrend. So I think any positive surprise, and you could. Stock is trading at 33.60, and the largest demand is in 40, implying 20% move. Usually JD, Alibaba do not move 20%, right? These are very large cap, one of the biggest Chinese stocks. So for that reason, I decided to, unlike Alibaba, where I was long volatility, I decided to get short volatility on JD, and I sold 28.5 and 25.5 put, and 40 and 43 call. So I'm risking $3. I collected 12 cents, right? So what is it? 5%, right? 5% for holding position overnight. For sure. There is not much positioning outside of 40 and below 28.5. So it could be. All right. Any questions? All-time high on home builders. All right. So let's look at home builders and look. So it's been. We have two candlesticks. All right. Let's see. Let's do 5 minutes. So FXI looks like it's reversing. You do have a pretty strong price action in silver, right? Silver rallied 1.5% on weaker dollar and weaker yield. It's kind of now back to this correlation where it moves together with the market. Spiders is at session high, and small caps are at session high. They do have Microsoft continues to rally, right? It's been 10 minutes. Some models doing a good job saying that Microsoft is outperforming. Let's see, is there any overhead resistance? Yeah, so it looks like it's clear, continues to go higher. I'm gonna buy Microsoft, right? Based on you can find these signals in Active Trader, right? MLM, Microsoft, or you can find them in the aggressive power trader on Yellow Tunnel. So wait for 10 to 15 minutes, and then the idea is position size. I would use 50-day moving average, right? If you're not doing day trading, I would use maybe 1% stop loss, 414. I mean, 1% stop loss for day trading or for if you're doing short-term trading. So you can look for 1% gain, or you can look for all-time high, which is about maybe 2% gain. So let's put on MLM trade, sorry, a Microsoft trade. So the goal is not to, so on $10,000, $100. So $100 divided by 5, maybe 20 shares, right? 20 shares. Trade the same amount, I think that's wrong, right? If you always use the same amount, because you have different volatility, different levels. So Microsoft trading at 420 or 3, let's put 420. People, very common question is, what if I want to trade options? If you want to trade options, so I got it filled Microsoft. If you want to trade options, I would use weekly options that expire this, this Friday, call 417.5, right? So that would be my proposal. In terms of target gain and stop losses, I would still use the same levels, right? 5 points to the upside, 5 points to the upside. That's where I would trade Microsoft, right? That's where I would use the options. I mean, you do have to be careful, since if it's Friday expiration and it does drop 1%, then the premium, you could lose more than $250, right? So if you want to limit your losses to only to $100, then you would have to close the position, not when it reaches 520, but when the option drops half of its value, right? So the rule of losing $100, but if you trade in stocks, obviously, time is less important. If you trade in weekly options, especially that expire this Friday or next Friday, time is of the essence. So if you want to limit your losses to only $100 and the option is worth $2.50, then you would get out when it loses 50. Wait, you 417. No, it's probably it's trading at $2.20, right? Actually, Microsoft is pulling back. That looks like Microsoft is pulled back. So that would be the process, the thought process of how you would enter. GameStop is back, right? Roaring Kitty is back. You do see a pretty sharp pullback. It was, I think at some point it was $70, so it lost almost half of its value. So again, kind of this gamma squeeze with options data. At this point, it's probably going to be range bound, so I would be careful if you're trading GameStop. I did put in this position. Just kind of show you how to trade these. So I did 30, 32, 34 call spread, but I spent only 10 cents, right? So this is kind of a good way to test trading some of these very rapidly moving names, because single options are extremely expensive. Even like if you do debit spread and credit spread, so butterflies would be just, you can obviously, I probably should have made it a little bit wider, didn't realize it's going to move 100% every day. But That's just one example of butterfly on GameStop. All right, we talked about JD, we talked about Alibaba. So I'm going to put two positions how to exit this. Microsoft. So one, I would look for 1% gain on half of the position. And exit the rest of the position. Probably right below all-time high. So 528, 527.90. So so 427.90, 427.90. $424. Let's just double check. Yeah. So 424, 427.90. Okay. So closing half of the position at 424, looking for 1% gain. Closing the second half of the position, looking for 2% gain. Right, and probably not going to happen today. I mean, it could, at least on the half position, but holding it overnight. You have Amazon pulling back. So you don't have a kind of a broad-based rally. You have Amazon pulling back. Let's look at how the mega cap are doing. Looks like we're still into this rotation trade where materials, right? We talked about materials. And financials, industrials are outperforming. And Magnificent Seven, kind of a very selective. Apple, Tesla is underperforming today. I mean, Microsoft is in line. Amazon is underperforming. Google is in line. Netflix is underperforming. Meta is in line. You have JP Morgan not participating. Morgan Stanley and Goldman Sachs, right? Very strong rally. Morgan Stanley continues to rally, and Goldman Sachs continues to rally to all-time highs. Is it all-time highs for Goldman Sachs? Or they're doing catch-up? Yeah, so it's a very strong pattern in. Let's see if anything else stands out. Rivian is down. Bitcoin is up. All right. Any questions on Microsoft trade? So it looks like, yeah, home builders doing a catch-up trade. I mean, they've been weak, but very sensitive to interest rate. Thank you, Bob. Let's see, did I ask Mark XOP possible reversal? I answered that question. Let's see, Chuck, good morning. Alibaba trade with reviewed Alibaba. So it looks like home builders are strong, leading the market. Industrials. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Retesting all-time high, right? So industrials are in strong uptrend, still hasn't kind of trying to break through the overhead resistance. What else stands out? We have REITs still underperforming. Retail stocks are weak. We do have Walmart and other Depot earnings kind of flat, right? There was a positive beat, there was a miss. So Home Depot is not going anywhere. And XRT has been weak. Energy is pulling back. Let's see what else. So retails are weak. Transportation is in line with the market. Let's look at transportation. Still underperforming, so transportation is still underperforming the market. Semiconductors are basically retesting all-time high. So that would be a perfect setup. Like if you want to get bullish on the semiconductors, you want to have a clean breakout, like Goldman Sachs. Clean breakout, then there's a follow-through. Semiconductors, you want to wait for the breakout. You know, maybe wait for the NVIDIA earnings, and that will set the tone where the semiconductors are heading. Let's see. So it looks like Spider's giving up some of its gains. Financials right at all-time high, trying to break out. Energy is lower. LA Lilly, gold. All right, so let's look at interest rates. So it's like bulls and bears are digesting the data, right? We are off the session lows, but still have a gap on the 10-year yield. And that moves the market accordingly. Let's look at what else could be moving the market. Powell's speech yesterday, right? I forgot about Powell's speech. Kind of reiterated his previous speeches, is that rate hikes are off the table and still data dependent, and looking for more data in order to decide when to start lowering the interest rates. But economy is resilient, right? The kind of same speech, bullish speech. Okay, so we had retail, CPI data come in better than expected, right? Expectation was 0.4, came in at 0.3. Year over year came in with expectation. Retail sales were weaker. We have several Fed speakers, Fed presidents of different regions speak today. Tomorrow, jobless data, I'm not sure if it's going to move the market. Leading indicators. And then next week, more Fed presidents speak. FOMC media earnings. All right, any questions? That FCX on pullback, yes. So materials, the model today actually identified that MLM, right? And MLM is part of materials, FCX is part of materials. They kind of move in tandem. I would be a buyer on the pullback. I think at this point, unless NVIDIA has horrible earnings, which I cannot imagine why. They could disappoint on maybe few forward guidance, but probably will be short-lived, right? Probably will be short-lived. So I think at this point, it's a pattern of higher highs and higher lows. I would be a buyer into pullbacks. I would still want to wait for a breakout in small caps, right? Before I turn on the green light, I want to see, small caps break through that 2-year high, spiders break through this year high. Once you have a breakout for 1 or 2 days, okay, then you can follow through. I'm not sure, maybe into NVIDIA earnings, people are not going to be too optimistic, but we'll see. So FCX on pullbacks, I would be a buyer. right? That would be a buyer. Materials, I think materials is one of the strong, right? Where Goldman Sachs, Morgan Stanley are a very strong uptrend. Industrials, right, like GE. Right? These other stocks, I think, are actually outperforming the Magnificent Seven, right? Because they're the ones that are continue to grind higher. GE is on strong uptrend. We talked about Goldman Sachs. I mean, short term is overbought, so I would expect some kind of a. Ted, thank you. Arminder, Dell. Dell, I think, announcing earnings shortly. I mean, so far, I mean, semiconductors is at all-time high, right? They're at all-time high. Dell is breaking out. I mean, it's facing the earnings, right? So, I mean, it's hard to predict exactly what's going to happen. Dell is in 15 days. I mean, it is breaking out. I would same thing. I would wait for NVIDIA earnings or for at least SMH to break out. And because SMH is kind of still underperforming. It's still underperforming. It's not even at all-time high. ARM, right? I mean, granted, they're in different niche, but still, ARM has been weak below 50-day moving average. You have like kind of an AI. Actually, Taiwan Semiconductors at 52-week high after the earnings, so it kind of recovered all of it. So it's, you know, even if it's negative, like stock like Taiwan Semiconductors was able to, Supermicro computer was able to recover. SMCI, you know, still weak, right? Pelletier is still weak. So you have kind of different mixed reaction to the earnings. I think the advantages of Dell, it has a much smaller multiple, right? Like Pelletier is trading. Where's the multiple? P of 30, right? So that's why people gravitate toward Dell, because it's still a AI story. I mean, they're doing, you know, a different niche, but you know, they are in data centers, not the most popular servers from my experience, but nonetheless enough demand to propel the market. You know, where it doubled in the past few months, past few quarters. Mark XLV hold breakout. Let's see. Let's go over the rest of my position. I do have Merck in healthcare. I mean, it does, you know, it does look strong, right? So healthcare looks strong, right? It's about 50-day moving average. It's kind of curling up, trying to close this gap. It is trying to close the gap. I think I have UNH. How's UNH doing? In strong uptrend. So that's good. And Merck, let's see. More kind of consolidating. So I think it's yeah, I think healthcare is same thing, buy and pull on pullbacks. It looks like it's going to continue going higher. All right, let's see what other positions. Amazon has been underperforming, so right, we talked, or in line. Oh, I forgot. Tesla was underperforming. Yeah, Amazon is actually not participating in rally, so it's a little bit concerning. But it's about 50-day moving average, right? It's kind of struggling to break through all-time high, and we see most of the sectors, it's the same price pattern, right? Most of the sectors, like small caps, spiders, you know, are waiting for. We're waiting for a breakout. So that's where this rule, waiting for 2 to 3 days, kind of makes sense, right? You want the people to digest these news to confirm, because the trend has been down, right? Short-term market was overbought, and medium-term, short-term trend is down. But for the trend to change, to reverse, you want to wait, right, for the breakout to be confirmed. So for now, it's kind of, well, we'll see where we're going to close. But we are at session low, right? And small caps, we're at session low. So I'm still bullish on Amazon. Still bullish on Amazon. Alibaba leg down. I'm not sure what that trigger could be. You do have JD announcing earnings tomorrow, and Baidu, right? So JD announcing earnings tomorrow, much better chart pattern than Alibaba and Baidu. These are large companies. Position this put spread, 75-70 put spread should start working. But if it's not, then then it'll expire worthless. I did buy FXI, right? I did buy FXI, so I'm long FXI. It looks very strong, right? Despite geopolitical risk and whether it's investable or not investable. I mean, you can trade anything, but it does show a strong uptrend. So we'll see how obviously if JD and Baidu have very strong earnings, then FXI is going to continue going higher. But you do have these 3-4 weeks of higher highs and higher lows in the FXI. We talked about GameStop briefly. Talked about Merck. Okay, QQQ put spread at this point. I don't know. Let's see how much it's worth. Unfortunately, it might not worth much. So my hedge, and it's kind of paying for insurance, right? You always pay for insurance. But QQQ is at, what is it? 35 cents. Yeah, I don't think we're gonna have a significant pullback. It's June, so I'm gonna just get out of it. Save 30 cents. $0.35. But it did lose most of the premium at this point. And it's unlikely we're gonna, at this point, have a kind of a large pullback back to the recent lows. I think that's probably off the table. Buy to close, sell to close. Okay. Hedge. Probably should close SH as well. I'm just gonna wait for a breakout. I assume sooner or later we will be, we'll confirm this breakout, and then I would close the position in SH. We're close to session high. Close to session high, and day one, day two, I would just close the SH. Still long silver. Silver is continued to grind higher on the news. Year highs around 27 level. It was as high as 2660. So still long silver. This put is worthless. And then I have XLE and Wells Fargo. So let's look at Wells Fargo. So banks, sensitive to interest rate, looks like Wells Fargo continues to grind higher. So Brazilev and Wells Fargo. And then finally XLE. XLE is sitting at this key support, right, 92.40. So I would watch that and see if it's able to hold that level. Any questions? Jeff, what do I see? So the question was on Netflix and Apple. What are the next levels for Netflix and Apple? Let's look. So let me just wait for. Because position can show you how much further can SPY go. I think there was a big position at 525, right? And the next level, I think 535. So I want to just look before kind of, because Apple and Netflix usually move together with, spiders. And there's some divergence, right? Netflix didn't have a very good earnings. Apple actually, doing more of a catch-up trade. But let's look at spiders. And I know some of you are joining later, so if there's a position you want me to review, or stock, or just repeat, macro kind of take, macro analysis, just please let me know. But I do see that more people are joining later on. And thank you everybody for joining. Appreciate your time. All right, let's see spiders positioning. Sorry, I'm traveling, so it's a little bit. So May 15, 16, and 17, right? It's going into expiration. Largest position in terms of calls right now is at 530, right? So the next level is 530. It's not a huge position, but probably the largest position in this week. And then next week, largest position is still 530. So going into the NVIDIA earnings, I think to break the 530 level, NVIDIA has to have hit at least a double or maybe even a home run, right? It has to be a very clean earnings report. You can't have any guidance that's below the expectations. So assuming that that is the case, we may or may not break 530. It depends on the earnings. But so far, you could see a pretty strong demand at 530. Next level is 535. 530, 535. And then going into June, once the May expires, right, we still have June expiration. May expiration that will take this Friday. That could cause some more volatility. Going into a June expiration, right? Going into June expiration, largest position is at 545, right? So you have 530. We have to get to 530, then 535, and then 545. So probably not going to get much further than 545 by June expiration. But 545 is another 4%, to the upside. On the downside, heavily hedged at the 50-day moving average. So, any negative news from NVIDIA probably is going to be tough to take out the 50-day moving average. So I think that's where we're going to trade between 50-day moving average and the recent trend. Now I think it's higher highs, higher lows. All right, so in terms of Netflix, I mean, I don't like to unless you're a long-term investor, if company has a disappointed earnings like Netflix, then you probably want to trim it, right? You want to 618, right? You have overhead resistance at 710, 650. So then you could get to 650 on the downside. You do have hedge around 580. Let's look at Netflix. I mean, it's underperforming the market, right? QQQ is breaking out. I mean, spiders are breaking out, right? QQQ is actually, I think, still underperforming, right? Let's look. Either buy QQQ or spiders, or buy Goldman Sachs or General Electric than Netflix. But if you're looking for specific support and resistance levels for short term, let's look at the model. It does see positive trend, right? Netflix, 6 months. I think long term, it's still in downtrend. The downtrend hasn't, this uptrend was broken. So the uptrend has been broken after earnings. It had a very impressive recovery, but still not at all-time high. So I think best case scenario, it's it can retest all-time highs as market rallies, but it could also revisit the lows, 557. So I think there's more risk to the downside than to the upside. So if it breaks through this week low, I would get out of the trade, especially after CPI data. On the upside, I mean, you could run it to all-time high. I mean, if it revisits all-time high, I wouldn't be surprised. So that's Netflix, Apple. Apple, it's been underperformer. It had decent earnings. It's above, it broke above the support level, and it's on its way to probably retest all-time highs. Right. So same thing. I would use. I mean, it's underperformer, but at least earnings reaction was positive. So you do have the positive catalyst. I would use this same thing. This week low. This week as your stop level 185, and maybe trim the position around 200. So you have maybe 10 points to the upside. You have maybe 5 points to the downside, and with CPI and PPI data, I think it's a pattern of higher highs, higher lows. Jeff Armida, thank you. But yeah, GameStop, yeah. So what is this guy? Key name Roaring Kitty. If you haven't watched Dumb Money, I encourage you to do that. You kind of it's 34. Where's my spreadsheets start getting filled? Did I get filled? What is it trading at? Butterfly. GameStop. Not really. That's the problem. That's with any spread on GameStop, they're just not moving. And single options are expensive, right? I mean, if you bought a call at 60 and it dropped 0.5%, it's a problem, right? It's large losses. Yeah, I did close NVO. So the question was on NVO. I did close NVO. I was kind of waiting for the breakout. Maybe it makes sense to kind of. Well, at this point, I think it needs to make all-time high. So for now, I'm just going to wait. But it does look strong. CrowdStrike. Thoughts on CrowdStrike? It looks strong, right? Continues to rally. When is the earnings? I mean, earnings is in 20 days. Just like trim position or sell calls against it. And there's two things will happen, right, in the next 20 days. It's either going to pull back after the earnings to 280 or it's going to break out. Right, so if you do see a continuation and breakout, then I would follow. But for now, it's overbought, right? It's overbought and it's facing overhead resistance. So you probably want to wait for, I assume this was earnings. Kind of false breakout and reversal. So you wanted to first break above this level and then break above this level before getting very excited about CrowdStrike. But it's a strong stock, right? It's security. They've been lagging, right? Security stocks have been lagging. I think some of the AI stocks have been lagging. So we'll see. Bitcoin is up today, Nvidia is up, so it's good. Breaking out before earnings. Yeah, Meta is same thing kind of to Netflix, right? The reaction was negative to earnings, so it has to it's kind of in a penalty box, right? And you can see on the rally volume is deteriorating. So yeah, Meta is stolen, Netflix is stolen. Dell is breaking out. I mean, that would be one of the trades, right? It does look strong. So you have till next Wednesday, till Nvidia earnings, right? That you could potentially continue to ride this trade. All right, it's 9:21. We do have a closing bell today. Scott will cover the closing bell. I will cover the morning bell tomorrow. Scott will cover morning bell Friday, and then there is no closing bell Thursday and Friday. So today, regular schedule, we have a closing bell, but Thursday and Friday there is no closing bell. So, and then Monday we'll be back to regular schedule. I will have on Yellow Tunnel. I'm back on Sunday, so instead of usual Thursday, we will have Sunday, May 19th at 10 a.m. Chicago time, 11 o'clock Eastern time, 10 o'clock Central time. This Sunday webinar, we'll have CPI, we'll have PPI. People will be able to digest all the data, and we can talk about strategies and sectors and other opportunities in the market. Maybe cover some of the setups like butterfly. A lot of people asking questions about butterfly spreads, so we can spend more time going through the details. Meanwhile, let's see. Ten-year yield is closer to session low, so that's positive for the market. Dollar is in the middle of the range, closer to session low. QQQ is at session high, and Spiders is at session high. Right? Spiders are at session high, QQQ special session high. Small caps are maybe closer to the session low. All right, any other questions? All right, Bob, thank you. Everybody, thank you very much. Have a great day, and I will see you tomorrow morning.